Capitec today closing with a market cap of 20 billion rand. Now, the retail bank's explosive growth in the past few years has raised questions about sustainability. Loan impairments shot up sharply 62% to 1.6 billion rand in the year to February, while the value of loans advanced also tapered down. However, Capitec currently has a return on equity of 29%. So this money has certainly been coming back. The returns to shareholders have certainly been impressive. The earnings growth rate has been above all the other banks if you want to take as a lump sum and just compare them. But still, Anthony, does that make the stock perhaps the one to get into when you want to get into the banking sector in South Africa?
Well, in preparing for tonight's presentation or interview, I went through the Capitec results, and I'm very impressive. They've got reams and reams of key performance indicators.
Right.
And the one key performance indicator I couldn't find was their average effective interest rate that they charge their clients. And I'm guessing that it's around about 40%. If you include all the administration fees, if you include the insurance, life insurance that they sell,
yeah.
The average effective interest rate that they charge their clients is about 40%.
Is that legal? As in absolute terms,
I think in absolute terms,
the National Credit Act would have something to say about it.
In the context of the lowest interest rates we've had in 30 years, I think 40% is exceptionally high.
It is.
Now, Capitec's business model rests on two assumptions that perhaps are at best wrong or dubious or debatable.
Okay, I'll take debatable.
The first one is that unsecured lending is very risky. Paul alluded to it earlier, that the average impairments is about 10%. So they say, well, we've got to charge 40% interest rates because so much of our credit is actually written off in the end. But the actual reality is that only 10% of it's written off. Well, that's high relative to the other banks, but in the context of 40% interest rates, it's not high. This is why they're able to generate 30% returns on equity. So we think that that assumption that they have to, or they will be able to charge interest rates at this rate indefinitely is perhaps debatable. The second thing is that extending credit to the previously unbanked is a good thing to those people.
Yeah.
We think that interest at 40% to fund consumption is not sustainable for that client. We think that the quickest way to financial ruin is to borrow at 40% and use that money to consume. And anecdotally, I would suggest that a lot of that money is also used to pay off other debt.
Yeah.
So this debt spiral is a great contributor to the cycle of poverty we're seeing.
Yeah.
Now, the second point I want to make is that the PIC owns a lot of these shares. Able, Capitec, JD Group,
yeah.
All these micro lenders where they make a lot of money out of extending credit to previously unbanked, unsophisticated financial consumers. Now, it's quite possible that at some stage the PIC will say, well, we are a socially responsible investor. The cycle of poverty that you're perpetuating here relative to the ROEs you're making is just not justified. In other words, you must cut your ROEs by, say, 10% to risk-free plus 10, so maybe to 18%. At that stage, we think earnings could fall off a cliff, and the rating could also be impacted. I'll say this is going to happen, but these are the potential risks in these types of stocks. And relative to the upside, we don't think that the risk of owning the share is justified.
Indeed, we must talk about those risks, because when MTN was going into Iran, people said, no, these guys are getting it right. And when the returns were coming in, when trouble came, people forgot about the risks they were taking. But Paul, Anthony is raising questions around the sustainability of the Capitec model, number one. Number two, he's also raising questions about the morality of the interest rates that Capitec is charging.
Look, I think he makes valid arguments, but he's targeting them at exactly the wrong players. Both Capitec and African Bank lend to people who have salaries. So they have paychecks, so you can get a 3-month statement. So we're talking about policemen, teachers, security guards, people that are employed in the formal sector. And they may charge an average rate, which is quite high. But as I said earlier, small loans to new customers at high rates, lower priced loans to well-established clients at longer term periods for repayment. So research shows that these loans are mostly used to pay for education and for housing extension for lower middle income families. So the loan shark type scenario, the spiral of debt and all that, that's more you know, at the kind of unscrupulous end, the sort of people who take your ATM card when they give you a 3-day loan and so on and so forth.
Right.
So I'm comfortable with this sector and the way these guys carry themselves in this environment. The question is, what are you prepared to pay? I think Capitec has been a real rocket ship. It's done fantastically well.
Yeah.
And I think it's probably a bit expensive at its current level.
Right.
African Bank, on the other hand, I think is too cheap, but I'll come to that in a moment.
Absolutely. Some people lost money, lost the opportunity with Capitec because they said it was too expensive. But Paul, part of the reason you may be not quite warm on Capitec is because you are on the other side. African Bank is your stock pick.
Exactly. Look, I've got a great story about Capitec. I'll be extremely short. In 1999, I went to visit Gianni Mouton and Chris Otto. They had said, we're going to list a bank at R2 a share. I thought when I went out of the meeting, what idiots, what are they talking about? It's not a good time to list a bank. Now I think it's trading at 200, so don't tell me about missing the boat. But yes, African Bank, I love that one.
Why do you love that one?
Big, well-organized, good management team, modest, focused, buying access to retail lenders. I think they're going to go and do another transaction. Well-funded, just a very professional outfit.